The US economic collapse is evident to those who are paying attention, but in the mainstream media and the government, they seem oblivious to these facts. But right now, the World Bank has warned of a global crisis. Let's cover those things today. Let's see what we can find out and connect the dots as the World Bank warns of a global jobs crisis. Right here, if we go into it, it said the world is facing a global jobs crisis that is hurting the chances of reigniting economic growth, and there is no magic bullet to solve the problem. That's what the World Bank warned, and that's something that I've warned as well. Speaking of what I've said, if we look at the bottom paragraph here, it says, we are also seeing wage and income inequality widening with many of the G20 countries. That is precisely what I've said. It's as if these institutions like this have read my book or something, because it's exactly what I've said, and they come out later on and have to admit it. But that's just the way this works, because they're always behind the times. They can never admit it until it's too late. Look what happened in 1929, only weeks prior to, and even days prior to, the big crash. They were saying everything is just fine. There is unlimited amounts of prosperity. And then what happened? The Great Depression. And that's exactly what's happening right now. Sure, the stock market is increasing, but real wealth is long gone. Look at this right here, the World Bank saying that the wage and income inequality, I talk about a chasm, a growing divide, I talk about this wealth gap all the time, and now they're here admitting it. So let's take a look at what exactly could correspond to this. The unemployment rate is quite dismal when you use the actual statistics. So in my book here, I use the chart for the U3 versus the U6. And these statistics are out of the BLS, and while the little dates, they might be a little bit off here. However, let's just take this as an example to show you that when you use their statistics, their models, and basically for those who don't know, the way that works is essentially if the individual has been out of work for a year, they just wipe them off the statistics. It's a pretty simple way to increase the statistics like that they do. So plain and simple, it's fraudulent. So that's how they are able to say that the unemployment rate continuously goes down. It's simply because people can't find work for over a year. That's unfortunately the case. This is out of the Daily Signal. They're talking about the war on poverty being a colossal flop. I sincerely agree with this, and this is clearly evident after the financial crisis. So let's get into the report that they had here out of the heritage.org, talking about the war on poverty after 50 years. And it says this is quite unbelievable, actually, that U.S. taxpayers have spent over $22 trillion on anti-poverty programs. And if you adjust this for inflation, this, by the way, does not include Social Security or Medicare, is 3 times the cost of the all U.S. military wars since the American Revolution. That is an extremely dramatic amount to think about, even to show you how much money is wasted on all of their programs. That's what happens when you have a big government. They simply waste money. Money could have gone to more productive means, but of course, simply doing nothing, being very wasteful with the money. And this problem, of course, isn't just in the US. All of the dominoes will fall, I assure you. And right here, this is out of the India Times saying, show us the money. EU seeks billions of euros to revive the economy. They're always looking for a new scheme, or scam, I should say. And right here, the finance ministers from the bloc's 28 countries are fleshing out a host of ideas circulating in European capitals. You know that when these big guys get together, that bad things are going to happen. With interest rates already at record lows, ministers need radical steps. Remember, I quoted that, radical steps to help growth at a time of near record unemployment. That's exactly what they're going to do, radical steps. I can only imagine where they're going to go from here, judging by the fact that they've already gone beyond anything ever seen before. So right here you had Poland's 700 billion euro European Fund for Investments, and you had the ECB's plan to resurrect the EU market for asset-backed securities. And you can read on about all the things that they plan on doing. However, the fact remains is that they're using these absolutely insane instruments, like they like to call them, and they're nothing more than gambling with these debt that's been created out of nothing. They create debt. That's their way of creating wealth, and that simply is a matter of fact that's going on right now, and nothing's going to change that. The fact remains for you as an individual is that your money being in this system is excessively risky. They're going to have to start with the bail-ins at some point in the near future in order to get this money back, because they need to sort of reimburse themselves. But what is, the result of all of this? And this article shows you that out of Bloomberg, milk cost most ever. And of course, it's not just milk, because they're saying that there's a shortage here and this and that. It's not the way that works. We have inflation in the system because of all the central banks around the world in a race to the bottom, printing their paper dollars, printing their digital currency, expanding credit, however you want to call it. It doesn't matter. The fact remains is that they are doing this. It's causing inflation. Inflation is, well, the real definition of inflation is the expansion of the money supply. But for this purposes of this video, you can see that taking effect right now as prices are rising. Electricity prices are at near record highs. You have food prices at near record highs. Basically everything that we need to buy, the most important things, are rising in price. Yet at the same time, our wages haven't gone up in decades, and that's just a simple matter of fact. Let's go into this one last thing, showing you the Wall Street. The Fed's first rate hike is coming in Q2 2015. They said that this majority of the Wall Street top bond firms see the Federal Reserve starting to raise interest rates by the Q2 of next year. Now, if they actually do this, it will undoubtedly collapse the system if they put it up to a meaningful level. If they do raise the interest rates, which they would have to at some point to quell the inflation, it's going to be so small. And then of course they can always bring that down later. Are they going to stop with the QE? Are they ever really going to stop, considering they do this behind the scenes? We don't really know. The fact remains is that if they do raise interest rates to a significant level, and this will undoubtedly collapse the system once again. And in fact, we're overdue for some sort of crash or correction, as they call it anyway. So that is it for this video, and I hope that you found it informative, and if you did, please give me a thumbs up. That signals to me you like this information. It signals to other people on YouTube that this is a good video, so I would really appreciate that. And of course, if you're not already, I hope that you will become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom and fill in your email address, and you get occasional emails from me with good, short, concise info.